CNBC TV18, embarking on a quarter century of excellence.
Records stumbled on Dalal Street in 2023, marking the 8th straight year of gains. The Nifty rallied a whopping 20% this year to post its biggest gain in 6 years. But the star performer was the mid-caps, with the index soaring 46%. Hello and welcome to another edition of Editors Roundtable, the last one of 2023. We'll recap the year gone by. We'll take a look at what 2024 could hold for our markets. I'm Reema. With me are the boys, Nimesh, Prashant, Mangalam, and we've got Hiren with the Director CIO at Alchemy Fund. Alchemy Capital Management. Guys, we've all been in high spirits even before the New Year's party.
Yeah, what a year it's been. Right? The biggest drug of this year, so to say, has been the equity markets itself, I guess.
Absolutely. I mean, what a performance, right? I mean, we all spoke about it's been a record year for the market. Just to put some records to the numbers, right? This year in 23, India has been the biggest market cap among the top 10 countries in the world. Right, we've rallied almost 26%, so to speak. So in percentage terms, India has been the biggest gainer in terms of market cap. That's the first big record, so to speak. The second big record was this is the 8th consecutive year of gain for Nifty and Sensex. This has never happened in the past before. It's
and
the
not
first
just with
time.
India, it's not happened with any global index.
Absolutely right. So India has actually, in that sense, broken that record as well. It's the first country to have 8 years of consecutive years of positive return. So that again is a big thing. We all spoke about mid caps and small cap doing good. The SME platform has raised record close to 5,000 crores with almost 187 IPOs. That's been a record in the SME market as well. So again, that speaks about the domestic liquidity as well. Fourth, the DI money, the DI flows has outpaced the FI flows for the third consecutive year. It has never happened in the past before. It's the first time that the DIs have outpaced the FI flows. And last but not the least, the PSU index, the PSU stocks. I was looking at the data. 102 PSU companies in in calendar year 23 have added nearly 20 lakh crores of market cap. That's the kind of wealth which has been created in the PSU stocks in just a single year. 20 lakh crores of market cap getting added. I mean, Hiren, you can probably add to this. You've seen so many cycles, right? Been 30 years in the market.
Yeah.
Have you seen such a market, like in 1 year, the PSUs gain so much, the PSU, overall companies add nearly 20 lakh crores of market cap. What's your take?
No, I think it's been a fabulous year. 22 was almost a tough year.
Yeah.
Nifty hardly eked out 4-5% return. The small cap index was down 14%, right? So this year definitely looks like a fresh of breath air. But since you rolled out a lot of statistics, right? And I knew I was going to be asked this question. It's kind of become fashionable to become very cautious after a great year. But I think people forget that if you see the bull market of 2003 to 2007, right? And let me give you some numbers, right?
Wow.
So if you see 2003, after a record 71% rise in the Nifty, 2004 was a 9% up, 2005 was 36, 2006 was 40, and 2007 was up 55.
Wow. So are we in that 2003 phase, like we're just starting on the bull market?
Well, usually bull markets start from the depths of depression, right? So I think the depths of depression was 2020, right? So we've had a positive, well, when we ended the year 2020, we were positive. Then we've had 21, 22 was maybe a little bit of a flattish year, but 22 is good. But it's not that it hasn't happened in the past that we don't have consecutive years of double-digit gains on the market, right? Now, that's not to say that, within the year you could have a correction or a volatile period. That's par for the course. But, that's how bull markets work. Year on year, you get positive gains.
The only difference between that, I would rate that as still the biggest. Maybe you've seen the 90s bull market and some say that was the big one. I've seen the 2003 onwards bull market pretty closely. And that was absolutely fantastic. The only difference is during that bull market, you had, I think, 30% plus falls during the course of the rise. this time, I mean, if you believe that the COVID lows were the depths of that sort of crash, I think the maximum fall after that 45% fall during COVID, I think was a 15% fall on the Nifty. So it's become, cycles have become shorter.
Yes.
And the falls are very short-lived, very shallow, very short-lived.
Very quick.
And the rises are then much bigger, right? So that's been the difference, big difference.
Yeah, I think, you see, the world discovered quantitative easing and cutting interest rates
Which
and
was not there back
liquidity
then.
injections only after 2008, right? Those were the good old days where you could see corrections which lasted for a couple of quarters and the gashes were deeper. Here, every time the market corrects, the central banks are out there to rescue you, right? With the tugboat. So
you know, Mangalam would have not seen the 90s ka bull market and 2003 ka bull market, but he's worked on the 23, the year which has been. Can you just give us the number and the data?
Yeah, you guys were talking about long periods, etc. I thought it's the last day of the year. So let's tell you what exactly the markets did in the last 1 year itself. Of course, we all know it, but let's put some numbers to that as well. You know, 8 years of positive returns is what we've seen in 2023. So let's tell you, in these 8 years of positive returns that we've seen, we've gone through a pandemic, we've gone through multiple wars in the world, we've gone through, you know, GST implementation, demonetization, all these worries, and the Nifty has compounded at around 13% itself. If someone told you at the start of this year that, you know, you will manage to hit a record high in the trough of March where we were around that 16,000 points, people had said, yes, we'll take it with both hands. And take it with both hands is what they've done itself. Because at the start of the year, you know, the market was looking at a lot of walls of worries. The US Fed tightening, we had, you know, high inflation, the FII selling from emerging markets, and geopolitical tensions in the world as well. But everywhere there is a wall of worry, there are lands of opportunities, and India was that land of opportunity. The India growth story, political and currency stability in India, that's what worked in our favor. Strong domestic and SIP flows, nearly $2 billion per month coming in. Government-backed themes in our markets doing well as well. And at the same time, we had the rise of luxury and leisure demand post-COVID coming into. What also helped us was some good performance coming in other global markets. The Nifty ended 20% higher this year. Of course, the 8th consecutive year of gain. You know, on a percentage basis, it may have underperformed NASDAQ, S&P 500, Nikkei in Brazil. But remember, on a compounded growth basis, it has been a rank outperformer. And it has also outperformed some of the other important markets. If you just take a look at it, you know, it's better than Dow Jones, it's better than the FTSE, definitely better than the Chinese indices, which corrected. This year has been the year of mid and small caps. Both these indices have gained anywhere around 50%. And these are indices, so individual stocks have done a lot better. And who's made a lot of money? We've had the PSE index. This year is definitely the year of the public sector enterprises. 81% higher on that index, followed by Nifty Realty, Autos and Nifty Pharma doing well. Nifty Bank was an underperformer with a gain of just 12% this year. The FII sold about 15,000 crores this year. And the domestic institutional investors, they showed the money, almost 15,000 crores every month in the year 2023, 1,68,433 crores and counting in the Indian markets by the domestic institutional investors. The Nifty gainers, top of the ranks, Tata Motors, the one Nifty stock that doubled this year, NTPC, Bajaj Auto, Coal India, L&T, all of them doing extremely well. Some of the underperformers included some heavyweights like HUL, Reliance and Infosys as well. So let's see how they perform in the next year. It was the themes that did well this year. So let's talk about the themes. The PSUs, REC, PFC, near 250% gains. BEHEL, NBFC, all of them 130 to 140% gains coming in. If you were in a defense PSU, you made a lot of money as well. The Mazagon Dock, we had Cochin Shipyard, HAL, BDL, BEL, all of them doing extremely well. And then we had the railway theme. This one was really in the fast track. 360% for Titagarh, 200% for Texmaco, Railtel, Ircon, RVNL, moving anywhere between 150 to 190% as well. And with the markets doing so well, why wouldn't the capital markets theme itself do well? BSC up 310%. Anand Rathi, Angel One, the financialization of savings did extremely well this year in 2023 as well. But let's talk about a couple of these underperformers. We had Delta Corp plagued by regulatory issues. Easy Trip, AB Fashion, Page Industries were some notable underperformers. But let's end on a high. These were the stars of 2023. And I had to cut off gains at 250%. So we had Suzlon, Inox Wind from the wind energy space do well, Zentech from the defense space, and Piccadilly Agro. This is the company that makes the Indri single malt, 550% in 2023 itself. So with that, it's a wrap on 2023. It's over to 2024.
Mangalam, thank you very much for that. Hiren, did you bet on PSUs? Were you believers in the PSU rally, say, a year back before the euphoria started?
See, whether you believe it or not, the fact of the matter is that they've been the star of this rally, right? And yes, we have participated. So, you know, especially in the defense pack, we do own stocks like HAL and BEL and Mazgaon. So to that extent, yes, we have participated. But I know, I mean, like, you know, people have generally, investors and especially portfolio managers have been very skeptical about, you know, participating in PSUs. But I think, you know, one should definitely not ignore them. I think this government has created the right conditions for the PSUs to really perform. And I think tremendous wealth has been created, like 20 lakh crores of wealth has been created. You can't ignore.
Can you buy it now?
Sorry?
Can you buy defense stocks now, since you've studied them?
Look, I think it's a secular long-term story, right? Now, one could argue they've had a fantastic run in 2023. Could they consolidate, go sideways for some time? You know, you don't know. It could. But I think if you take a 3, 5, 10-year view, I think the runway is so large, right? I mean, just to give you some data, that I think there is a PSU index and the total market cap is about 6 lakh crores. India's annual budget is 6 lakh crores, right? Of which just 150 lakh crores is the capex budget. And until recently, hardly 15-20% of that used to go to domestic manufacturing. Now almost 60-70, and the target is to take it up to 75-80% to be manufactured domestically. And as India grows, I think India's defense spending itself will compound at least nominal GDP, if not more, right? So I think the runway for growth is significantly large.
You know, I just want to make one point. You know, when we look, so from the time the Prime Minister and the Parliament gave that, he talked about PSUs, right?
Exactly.
The PSU index is up 40% since that point. But I think for viewers, it's important, people like Ramesh Damani, right, who've been early believers in the PSU rally. I mean, he is humble enough to accept and admit that he's been holding many of these stocks for the last 5-6 years.
Oh, yeah, actually.
You know, so, you know, when viewers see, well, it's moved up 40%, 50%, doubled, it's tripled. The point is that it's not as if people have gotten in, immediately turned believers and sort of, you know, bought large quantities and made money. They've held on to these stocks and they've not done well for a while. And then the rally has started. So,
you know, BEL share price was 10 rupees in 2014. And now it's, I think, 180, 190 thereabouts.
So, just to add to your point about Mazgaon talk, he also owns the stock for a very long time. I remember, you know, after the listing for good 3 years, Radhakishan Damani, Ramesh Damani, all the big investors were holding onto the stock, and the stock was pretty much flat. And the 4th year and the 5th year, I guess in the last 2 years, the stock is 10x. So that's the kind of move
so
we've
the
seen.
point I'm making is you need belief, you need conviction.
Yeah,
I mean, to be able to hold on through long periods of underperformance, only then you will be able to capture this 2x, 3x, or whatever we're talking about, right?
Yeah, I mean,
I think,
you know, Rakesh ji had this phrase in Hindi. He said, "Dukh, dard aur samay ke siwa paisa nahi ban sakta bada." Right?
Dukh, dard aur samay. We'll take those wise words, and now that we've looked at the year gone by, important to look at, you know, the immediate future.
That is more important.
That's extremely important, right? Prashant, what can one expect in January?
Are you being a party pooper?
no, I'm not. And, you know...
what are you bringing for us? Dukh, dard aur samay?
Kuch nahi. I mean, and maybe it's not even... I'm talking about the very near term. I mean, January. So let me actually go across to the big wall and explain what this is. So it's just something which happens in January. We don't know why it happens, but it happens. And that's why we call it seasonality, right? So this is essentially the big number that I want to point out. 12 out of 16 years, you know, I'm looking at the mid-cap index. The NSE mid-cap index is a 100-stock index. It's got lots of portfolio stocks. You can just go back. It's got lots of portfolio stocks, etc. In 12 out of the 16 years, the NSE mid-cap index is given negative returns. Right, the average negative return in January in the last 16 years is 2.2%. So, and let's just go to the timeline, and I think it speaks for itself. Look at that. I mean, you got 4 positive years. I'm just ignoring this 2021, But 2020, 17, 15, and 12, otherwise it's all been negative. As I said, well, no one knows why, but that's the way it is. And that's why we are saying, seasonally speaking, it's not a really great month. So what are these 4 positive months? Can we have a positive month in 2024? Of course, it's possible. But if you just look at the 4 instances out of the 16 where we got positive returns, let me just quickly tell you, in 2012, we got positive return in January. But 2011 ended with a 17% cut in November and December. So you were coming off extremely weak markets. 2015, if you remember, the prior 5 months, basically we got less than 15% despite that very strong election outcome, right? The previous year. 2017, January was positive, but 2016 ended with a 10% demonetization-led sell-off, which came later in the year. And 2020, markets were coming out of that NBFC crisis. So this is the backdrop that we're talking about for the positive years, right? The outliers in that sense. 2012 was the only double-digit return January that we saw, but 2011 had ended with a 25% fall for the market. So, and then we got the double-digit return in 2012. What are we starting 2024 with, right? The scale of victory or gains, whatever you want to call it, 7% gain in December, 18% return in the last 2 months, 46% return in 2023, and 57% gain in 9 months from the low of March, which the low was made on the 31st of March, and then the market has not looked back since. So I'd like to say, I mean, this is only important if you're trading, if you're chasing momentum, if you're buying higher in the hope of selling even higher. So then this becomes important. You've got to be mindful of these things. If you're investing, maybe the market just looks through some of this stuff, right? The bigger drivers really at play are the pretty decent macroeconomic fundamentals, which stand out, especially in a world that we are in right now. Strong expectations of lower global interest rates, which I think is going to be a big theme which will play out. And of course, reduced election risk after BJP's strong performance in recent state elections. So I think there's enough sort of positive stuff in the bag as well that the market may just sustain and look through the seasonality. But I thought, important to put what's really right in front of us as we come back next Monday, which is January, and the seasonality associated with it. Hiren, I don't know if you have any thoughts. If you do, please come in.
It's out of my syllabus. I mean, January could go either way. So 1 month is very difficult to call. In fact, a year is also difficult to call.
Especially difficult to call. Huh? I'm saying a year is especially difficult to call. The month is still,
I mean, from the data that you showed, considered that we ended with a big high, could you have a negative month in Jan or Feb? It's anybody's call. And I think, look, the acid test will come when the result season starts, right? So, if you have stocks which were flying purely on narratives and stories, and when the numbers really and the day of the reckoning comes, and those numbers don't stack up to the narrative, I mean, you could have a correction which could be quite meaningful in individual stocks.
So, what I'll do is allow you to just hang on to those themes, because it's those narratives and stories, the big themes of 2023, and importantly, what we're looking at in 2024 after this very, very short break. Stay tuned.
CNBC TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Now, 2023 turned out to be very different from what people had anticipated at the beginning of the year. The narrative at the beginning of the year was that Fed will keep, increasing rates, and this relentless rate hike will crater the US economy. US will go into a recession. But none of that played out. By the end of it, by the end of 2023, we're staring at a Fed pivot, a soft landing for the US. Most economists are saying there is no recession, at least in 2024, for the US economy, and the possibility of of rate cuts. So that's been, it's absolutely extraordinary the way the narrative has swung for the markets in 2023. The other theme that was there and it dominated is that big businesses gave birth to new entities. Geo Financial got listed, Tata Tech, the first IPO from the Tata Group in nearly 2 decades. Also, India asserted its place in the global economy in 2023, and 2 examples, one G20 presidency, and the second one is the inclusion in the JP Morgan Emerging Bond Market Index. And finally, what that fueled the last 2-month rally was the state election. But Hiren, that gets me to the next question about 2024 and the risk of politics. There are 64 countries going, to the polls next year. That's about 49% of the combined world population which will be voting. And you've got big economies, not just India, US, European Parliament will be voting. There is a possibility UK goes to the polls. You've got Russia, you name it, 64 countries.
Yeah.
How much of a risk can this be?
Look, I mean, geopolitical risk could come from anywhere, right?
Yeah.
I mean, I think we can sit a little pretty because now after these state elections, there's pretty much certainty that the current government will come back.
Yeah.
But the world is all interconnected, right? So, I mean, there could well be geopolitical risks. So many elections around the corner. Maybe this this year could be a volatile year. You can't rule that out at all.
You can take heart from the
spoke about.
just one more, Nimesh. You can take heart from the fact that you said how many countries?
64.
All 64 countries and all politicians in all 64 countries know one absolute clear truth: to keep the markets up. I think I'm just half joking here because it's true, right?
Yeah.
You look at the US, you look at everywhere else, and when I say politicians, I mean the institutional support for equities, for markets, is absolutely there.
Yeah, I mean, if you count the big country which matters and
US.
really the country which prints dollars, right, is the country that matters, right? And I think the reason...
Will the election outcome matter?
Usually they do matter. They do matter, but I think the run-up to the elections also matter, right? Because, there's always a narrative. People think that the Fed moves only because there's economic data, but sometimes there is also political compulsions, where you pivot so quickly. And now, and I was reading that, already the markets are discounting 6 or 7 rate cuts. In
Starting March?
Yeah.
So, just before we let you go, and this is a question that we ask everyone at the end of 2023, what do you think 2024 will be like? Will it be more of the same, or are there any new themes that you foresee emerging right now?
One thing that we've seen interestingly, if every year, if you take the top 50, you take the Nifty stocks, right? And if you take the bottom 10, very likelihood that 2 or 3 out of those bottom 10 will be the leaders in 2024.
So that with
right?
Tata Motors.
Just like it was Tata Motors, right? If you see 2022, it was down because of all the supply chain and the chip issues. And now it's 100% return. I mean, some Nifty stocks will give you mid-cap kind of returns, right? So you got to figure out, which are the 10 underperforming, 10, 15 worst performing stocks of 2023 in Nifty. And some of those could turn out to be winners in 24.
Wow, that's a good idea.
That's a good idea.
Well, that's a nice way to end what is our last editors of 2023. It's curtains down from the entire team. Thank you for watching and wishing you a very happy New Year.
CNBC TV18, embarking on a quarter century